Nope, you're muted.
Can you hear me now?
I can. I'm trying to pin Jackie. Just a minute. There she go.
Okay, Alina says that she's deaf but doesn't know ASL. So is closed caption available on this?
Great.
Hello, 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 hello.
Hello?
Hello.
Closed
How you
caption.
doing? You said she said that she's deaf but she doesn't know ASL, so closed caption is available, correct?
Okay, I see the closed caption.
Okay, good,
I
good.
don't see nothing. I see nothing.
Neither do I.
Yeah, I don't
On.
see.
Okay.
Turn
Right.
it on.
Can I speak?
Go ahead.
Okay. My name is Helena and I'm legally deaf and I lost my hearing at 46 years old. So I don't know ASL or sign language too well.
Okay. Are you capable? Are you in a space where that you'll be able to read the closed caption?
Yeah, I'm reading it.
Okay. So as long as we can communicate, then we should be good, right? It's nice to meet you, Alina, by the way.
Thank you. I'm starting to lose the rest of my hearing. And it's going bit by bit by bit.
I understand.
And I'm so depressed because I could barely hear anything.
I can only imagine how that goes from losing your hearing after such a long time. If there's no other comments, I'd like to begin. MD, I can't see everybody on my screen. So if anyone raises their hand, can you please let me know and I'll stop. MD has a question.
No, what is this about? Oh, is this an introduction to investing?
Yes, ma'am.
Oh. Oh, okay. Well, I'm not interested in investing anything.
It also gives a brief explanation of what IRAs are. I don't know if you are familiar with your 401k or your IRA.
Yes, I am. I'm familiar with that. I used to work for the city. I had a 401k.
Okay. Well, towards the end of this presentation, we'll also mention those as well. So if you'd like to gain more knowledge on that and investing and assets, then you should stick around. I can't hear her.
She muted herself. Yeah. She muted herself.
Okay.
So CJ, just go ahead and start.
Okay. I don't want to take up everybody's time. So Good evening, everybody. Happy Monday. I hope you had a great weekend.
I mean, CJ, I'm sorry, CJ. So are you going to sign, voice? I'm signing. What are we doing?
I was gonna voice a little bit, and then if they had questions, I can respond sign language as best as I can. If they have questions for me,
All right, so you want us to sign?
that's fine.
No, I'm asking because I thought it was the other way around. You wanted us to voice and you would sign.
You guys voice and I would sign.
Yeah, that's what I thought. So maybe I just misunderstood. Okay, go ahead.
So welcome to an introduction to investing. I know that our president, Marshall Davis, held a presentation a couple months ago on my behalf because I was sick. But we're going to start with day one here, which is going to include why it's important to invest, vehicles that you can use to invest. And like I mentioned earlier, at the end, we'll touch a little bit on 401k and IRA for those that are at that point in their lives where they are thinking about retirement. I do apologize, it's very hot in my house. Let's get started. What does it mean to invest? Investing is the acquisition of an asset or an item with the goal of benefiting from the appreciation of the value. Meaning that you obtain something with the goal of its value increasing so that it can be beneficial for you in the future. Examples of that are gold appreciation. Maybe your grandfather or grandmother gave you a piece of jewelry that they bought for a certain price during their life, and the value of that item has grown and is more valuable for you and your family. Stocks is another example. Maybe you purchased a piece of ownership of a company that you believe in, that you use, or that you heard of. And because they have did well, the value of that piece that you bought has increased. A big misconception is saving is investing. Saving is not investing. And we'll go into that. Saving is not investing because you are not raising the value of what you have. You're compiling it, but the actual value of it does not increase. Investing is important so you can make your money work for you. It allows you to grow your wealth, but also generate an additional stream of income. We are all familiar with exchanging our time for money, being a job, being a contract, being anything. But that does not generate wealth because it's an equivalent exchange. Time for money, my money for your time, vice versa. When it comes to investing, you're creating another stream of revenue to grow money, to grow wealth. Investing helps beat inflation. Inflation is why saving is not investing. Because as time goes on, the dollar or whatever you are saving could decrease. That is why when you put it in a savings account, you see barely any growth because it has to beat inflation. The first option of investing is real estate. Your first option could be a rental property. That is an example where you become a landlord and it's your responsibility to find tenants to live on your property. How would you make money off of that? The rent from those tenants would bring you profit. Now you have an option to do this residential, meaning for residency for people living, or commercial, where you can rent property to businesses. A second option with real estate is flipping homes. We've all heard of that before. People flip homes with the goal of buying, repairing if needed, and then selling the home. The goal is to flip the property, ideally within 3 months, or you can do wholesaling, which is another leg of selling, where you basically become the real estate agent without becoming a realtor. And I'll explain that real quick. Basically, with wholesaling, you put a house under contract. When you put the house under contract, you are looking for a potential buyer. And you are getting paid to bring that property to the potential buyer. So an example would be, if Lisa is selling her home because she got the home through a will, and Lisa does not want the home. She doesn't want the responsibilities of the home. She just wants to get rid of it. I, Calvin, can come to Lisa and say, I know people who will buy your home. Give me the responsibility of finding those people. Let me put your house under contract, and I will find you a buyer quicker than your way or through the market. I would then go to buyers that I know. Maybe I have a list of buyers, and I will present to them Lisa's home and why they should buy her home. Just because I built that bridge between a seller and a buyer, I can get paid for that. That is what wholesaling is. So you become a real estate agent without becoming a real estate agent, in a sense. The third option is real estate investment groups. Basically, a real estate mutual fund. It gives you the ability to have part ownership of properties without the responsibilities of maintenance, without the responsibilities of a homeowner, but you still reap the benefits. Let's go to some more examples of that. Oh, sorry. So scenario one, and this is a question for everyone. If a house costs $290,000, you know the renovation cost will be $60,000. And the APV, the actual price value, meaning how much you can actually sell it for, is $400,000. Should you buy this home? Is that a good investment? I would love to see hands. Can't see. Hold on, I'm looking. Does anyone know? Does anyone know? So let's look at it together, right? Let's look at it together. If I have a house for 290,000, right? And then if I buy it, I have to put down 60,000 to fix it. That means right now I put down $350,000 in this house with the goal of selling it for 400K. Would you, I'm asking you, would you put up 350,000 of, well, not even 350,000 to make 400,000? Is that worth your time? It depends. I say no because I'm only making $50,000. My renovations cost me 60. That's a bad investment. Hold on, we have someone in the chat. Miss Natasha says she chose scenario 1 over 2. Okay, let's go over scenario 2 because I agree. I do not like scenario 1. So in scenario 2, you live in your family's 5-bedroom home. Your mortgage is $2,500 a month, and you want to make extra money. You rent out 3 rooms for $1,000 each. How much are you making after paying your mortgage? That's my first question. So because we rent out 3 rooms for $1,000 each, that means we make $3,000 a month. But we have a $2,500 mortgage. So that means we make $500 a month. How could you make more money in this scenario? Remember, we have 5 bedrooms. You stay in 1, and you rented out 3. You have 1 bedroom left. You can either rent out that next room, or you can put a family in there yourself and move out. This, when you live with your own tenants, it's called house hacking.
It's called who?
House hacking. Means that you live for free off of inviting others to live in your home. I also mentioned an option of renting out the home to a family. That then makes the home a rental property. That is how, these are a couple scenarios and how real estate can put extra money, oh, hold on, in your pocket. Can you see both of us now? They asked, where'd you go? I guess. Okay. Investment option number 2, commodities. Commodities are physical things that, I apologize. Physical things that, physical assets that we can invest in. An example, let it be gold, natural gases, oil, food, agriculture. These are all examples of commodities that we can invest in and we can make money off of their growth. So yes, you can make money when oil prices go up. You can make money when gold prices go up. So one way is direct ownership. Direct ownership is easier when it comes to gold, silver, because we're not going to hold oil, cans of oil and wait for them to appreciate. Things like jewelry are direct ownership. Buying bars of gold, for an example, is ownership. You can also invest in commodity stocks, meaning companies that produce or process commodities. In November of 2000, gold was worth $411 per ounce. If you bought 2 ounces, which cost you $822 in 2000, and you held them in your person until February 2012, when gold was $2,092 an ounce, you could have sold both for a profit of $3,362. Now, I want to remind you all that investing is long-term planning. It is not for quick turnarounds, fast cash, short-term planning. That's not what investing is. Investing is long-term. So in this example, this was a 12-year investment. Now, some of you are saying, I don't want to wait 12 years for 3,300. You have to keep in mind that investing is additional stream of income, not your main stream of income. Your main stream of income focuses on your bills, your necessities, and what you want to buy, your wants. But your additional stream of income focuses on building your wealth. You don't want to pay attention to that. You want it to grow over time. In the first example, imagine if you were capable of buying 10 bars back then. That would be over $10,000 made. Now that seems more appealing for an additional income. A second scenario, a second example is maybe you have investment intelligence and investment strategy, and you foresee a rise in gold prices. With that information, you invested in companies and you bought stock in companies that handle and process gold in some way. Because gold is going to go up, then their value should go up. So your investment in them would appreciate as well. And that's another way that you can invest in commodities. Stocks. So stocks. Are there any questions, any comments? Nothing? Can't see. We're good to go. Oh, sorry. Okay. Stocks represent partial ownership of a company. When you buy stocks of a company, you partially own it. If I buy stocks in Tesla, Apple, Home Depot, I become a partial owner of the company. That means if the company does well, then my money goes up. My investment goes up. Vice versa, if the company does poorly, then my value goes down. My investment can go down. When you buy a piece of the company, that is called a share. The more shares you buy, the more of the company you own. A company has a stock price of $50 per share, and you invest $2,500. That means 50 shares for $50. The company does well for the year, and now its stock price is $75 per share. That's a 50% increase, which means your investment went up 50% from 2,500 to 3,750. If you wanted to, you could sell for a 1,250 profit. but you will no longer be owner of that company. You sold your ownership for a profit. So some people hold forever. Let the value go up or down. They want the ownership of the company just in case for future purposes. Some people buy and sell every week. Based on the performance of a company, if their value goes up or down. The stock market produces a lot of money because a company's value can go up and down very quickly. So in the second scenario, if we were to buy, and we bought Apple the first week of March last year, right before the pandemic started, it will cost us $53 per share. The value of Apple went over $106 by August. Meaning that we invested in a pandemic and the value of this company went up. So we made money even though it was a hard time for the world. A lot of companies' value went up over the last year during the pandemic, which is why you saw a lot of people making money in the stock market. There are some stocks that if you had 1 to 2 shares, you would have saw over 1,000% return, which is ridiculous. Any questions about stocks? No, nothing. They just,
Patrice,
yes.
Patrice.
Okay. There she go.
I'm trying to spotlight.
On there.
Calvin, you see her, right?
Yep.
Okay.
Yes. Okay. It depends. It depends on how much that company shares cost. So if you check your phone, like for example, the picture to the right, you see that gives you the price of 1 share of that company. That number changes every day. Oh, I lost it. Oh man, where's the box? How do I put up everybody? Hold on. Where should go? Where should go? Okay. Sorry. No, it depends on how much. For example, if Apple costs $500 a share. That means you need $2,000 to buy 4 shares.
Oh,
You know
wow.
what I mean? So it depends how much money you have to invest each share. Yes, yes,
Oh.
yes. You can put whatever you want, but that makes how much shares you own. So if it costs $500 and I give them $400, I do not own one full share. I own part of a share, but I make money if that share's value goes increases or goes down.
Mhm.
4 shares, yes.
No, she's saying 5.
5 full. If you have 2,000 and yes, so you own 4. You can sell one, you can sell 2, you can sell half of one. Doesn't matter. It's up to you because now you're the owner. You want to start looking out to buy.
Mm-hmm.
What I suggest is to check out the app Robinhood.
Oh.
I suggest Robinhood or Coinbase, and check on how you want to invest first. People are so fast to want to give their money that they do not make a plan first.
Yeah, that's a good question.
That's the responsibility of the investor. The investor is responsible of deciding what company to buy. There's different reasons why people invest in a company. Maybe they use that company every day, like your toothpaste or your deodorant or your hair. Maybe you want to be a partial owner of Can2, right? So you invest in Can2 because you feel like that company is going to increase. But just because you use that item does not mean the value is going to go up. You need more reasons. You need more reasons. So another option, people look at how the company business for the whole year, the numbers for the year. That's another option. The third option is people read the chart or the line graph and they see where price is now and if they can see price increasing in the future. There are different options of how to invest, or the last option, you give your money to a mutual fund, which we soon explain, and they're responsible in investing for you. They make the decision for you. Same with real estate. Maybe you're not ready to buy a house yourself. Maybe you and 4 friends want to experience home ownership. but you do not have time, or you don't know how to buy a home, or you don't know how to take care of a home. So you and your four friends money in a pool with a mutual fund, and they will explain to you five which house they think you should buy. Then you make the decision if you want to buy that house, then they take care of the home, and then you part of the money every month. So there are options for people who are not confident themselves to invest, and there are options now people can invest in themselves. That's why you hear stories of people becoming rich overnight, or like maybe 1 or 2 months, and they change their life. Because back in history, you needed a STO broker who you call, they're on the floor, they're on the trading floor, they invest for you, and they call back. But now, with technology, you can do it yourself. So my advice is before you invest anywhere, you need to research on why you are investing. If, if it's because I want to make money, the thing, do I want to make money fast or long? There's two different options. Fast means how fast can my asset turn into how cash. That's what fast means. So homes are not fast because you need someone to buy the home first before it change into money. So homes are long term. Stocks, I don't need someone to buy. I can sell my own time. So that's fast. Buying gold is long term because you have to wait for the value of gold to increase. So there's two sides. There's fast and there's long. That's why I'm explaining that with investing, focus on the long because it'll be less stress and it'll be easier to forget about. Just forget about it. Let your money grow. The same thing with the flower. Just let it grow. One day it's a seed. Next week it's a flower. Next month it's a beautiful garden. So like let it grow on its own. I think that answers your question. Okay. I think there was another question. I think there was somebody in the chat. Okay. Hi, how do you know which mutual fund is best to invest in? Oh, wait. Okay, save the last half on next month. Oh, wow, because it's 8. Wow. How do you know which mutual fund is best to invest in, right, Aya? It's the same question with picking a bank or whatever. It's really the best rates, like the best. I want to receive the most money for my investment, right? So is it okay if I say mutual fund as MF? Is that okay? Would you understand MF? Okay. So when I want to pick a MF, I want what's best for me. I want to receive the best monthly rate and I want to pay them the lease. I do not want them to take most of the investment, right? So the same example, if we all wanted to buy a house, right? And we're all under one MF, the MF will say that, okay, if the value goes up, we all make 5% each. 5%, 5%. But the MF will take 25% at the end of the year, right? I'm just giving an example. A different MM, they might say, we take 20% and then you receive 6%. You know, it's different numbers for different examples. Also, different MFs invest in different ASSE assets. So that means some MFs do not invest in stocks. Some MFs do not invest in real estate. So again, you need to research who you want to pool your money with. Again, it's a research, RESE, research thing. It's the same thing if you was looking for the best savings account. It's the same thing. You got to look and look. Or if you was looking for the best credit card, you have to look and look for the best rates. It's the same thing. Next, I want to say next time we meet, I wanted to share with you all where to find the top MF, top stock investments, the top, we said, commodities to invest in. MD says that because it's 8, I should hold on and save the rest. Hold on. I'm sorry, I'm asking if we have more time. Upcycle. What's upcycle? I'm not familiar with upcycle. Hold on. Give me 1 second. Let's look at it together. What happened? Upcycle. Is upcycle good as flip house? What is upcycle? Can you explain that? Is there any other questions also? Upcycle is buy something old, remake them into new before sell. I understand But there's different tiers with investing, right? That sounds like that's good for fast money, maybe. If you're good with your hands, you remake it into something new and then you sell it. That sounds like fast money. With a home and flipping homes is different because maybe you'll hold on to one home for 3-4 months. You don't know. You don't know if someone's looking to buy that home. So also with homes, you can use the equity in the home. So using equity in the home is another way to have access to money. Because a home is money. Doesn't matter if it has a mortgage or not. It's a home is money. Someone is looking to buy that home. So that means you have something of value. Upcycle sounds a good way to make money, but a different tier, a different tier. It's a different tier. That sounds like the same if, okay. You thank you, Ken. You make a good point. Home, flipping home, there's more risk for a lot of reasons. One, maybe you buy a home and it is bad on the inside, and you need a lot of money. Maybe it's not worth it. But in the same breath, bigger risk means bigger reward. So maybe I buy a home for 120,000. I put up 40. So altogether I spent 160 and then I sell it for 350. Now I put up 160, I sold it for 350. I make close to 200,000. That's a good reward for me. So again, I'm 40K for to fix the home. So 120K to purchase. Sorry. I'm sorry. I'm typing it. So 120,000 to buy. $40K to renovate equals 160,000 committed. Sell for 350K. I made, what's that, 21? Was that 19? 19? That's a good reward for me. Maybe that takes 6 months. I don't know. Maybe 1 year. I don't know. But I need to know that risk before I buy the house. It's different with stocks. It's different with bonds. It's different risks everywhere. You need to know how much play money that you have. How much money are you willing to risk before you invest? Because nothing is for sure. Nothing is guaranteed. I don't know, I suppose. Guaranteed. Yeah, Guaranteed. Nothing.
Promise.
Promise. Promise. Nothing's promised. Right.
Where did we go?
So I'm sorry we have to stop short here. It's 8 p.m. I want to thank everyone for coming today. This will be every month. MD. You say that you have a $50 bond. Is that what you said? Or do you have $50 CD? It's a bond. Okay. That's a good question because a bond is a loan between you and someone else. So if you have a $50 bond, you should read if there's any interest with that bond because you should be owed money. Is it with the government? Is that bond? So to explain to everyone, a bond is when we give the government a loan. That means the government is loaning from us at a fixed rate, FIXE, fixed rate with interest over time. They are low risk because the government will pay us back and the interest is very low, it's the same as a savings account. But they are really, really safe if you want to start investing. So Patrice says that she has a $50 US bond from 1980, right? So that means that that's why I'm confused, because it sounds like a CD, a certificate. How do you say certificate, Lisa? Certificate of deposit. How much is a $50 saving bond worth from the 1980 $50 Series E saving bond with a picture of President Johnson? Thank you, Miss Natasha. Okay. Natasha shared with me that $50 saving bond from 1986 was worth 113 in December. So the value went up from 50 to 113 over 30 years, whatever. The bond will earn a few more dollars in interest as the next payment in January. Okay. The bond earns interest the next payment, because with a bond, it explains the rules of your agreement with the government. They'll explain when you get paid, maybe monthly, maybe quarterly, maybe every year. It's different. But a savings bond grew from $50 to 113 in December. So you can double check what it's worth. Sorry, what it's worth is now. I will double check, or I would keep it. I would keep it. Give it to the kids. Let it grow. It was a gift. Okay. You see how some investments grow a lot, some investments grow very small, like 1986, and now it's 2021, and that only grew $60, $63. Look, that's nothing. That's why it's very, very, very important to research where you're investing your money, because you don't want to waste your time or your money. Some more risk than others, but more risk means more reward. I know for me, I trade every day, so it's a lot of risk, but the goal is big. So is there any other questions? Can you have more than other mutual fund and bond and other thing? A Brown asks if you can have more than one. And yes, you can. You can have one MF, one bond. There's no limit. It all depends on how much money you are willing to invest. Because in all together. Okay, I think I understand. If I have an MF that invests in bonds, and other things. Is that what you're asking? Yes, yes, yes. Okay, so yes, with an MF, that MF can invest in many, many different assets for you, not just one. They can make a portfolio for you, and they can break your portfolio into different categories for what you like. So example means 60% I want in STO stocks. 40% I want in bonds. I tell the MF, then they make me a plan. They show me that plan, and then I say yes or no. The MF is your funds manager. MF controls where your money goes, but you decide what you want to invest in. If you say, I want no stocks, they're not going to invest in stocks. Maybe CDs, yes, those are old. Those are old, and that's CD is what I thought Patrice had, but I believe they still invest in CDs with MF. You would have to look for a specific MF that invests in specific assets. What would I recommend? What do I recommend? What I recommend to people, again, is first, you need to know how much money you're playing with. If it's a little bit, I suggest saving more. If you have plans to invest in an MF or stocks, doesn't matter. For me, I recommend whatever you're comfortable with losing. If you're comfortable with losing 1,000, that's fine. Invest 1,000. But the goal with investing is to disengage, DISENGAGE. Distance yourself from the money. Do not be connected with the money, because you're gonna make bad decisions because you're scared of losing your money, or you get greedy and you want more money. Disconnect from the money, do your research, and look for the best plan for you. Wait, website. Okay, website. I got you. That's a good question. From what I know, there are not a lot of Black MFs or places where you can invest to support the Black business. From what I know, maybe now this year is different, but I'm not too sure. But with pooling pooling money with your friends is a good idea because you all can work together as a team to make future goals, future investment goals. It could be simple. It could be very simple, like a pot, right? An example, I can't even think of an example right now, but I would suggest talking with friends or the community of making a pool for a goal that you all agree with. Maybe investing in stocks as a team or a house or CD. There's different options. When you do your research, and she asked if I suggest a website. For me, I look for who's recent. So I'll look for Black owned mutual fund. Okay. Black owned mutual funds 2021. That's where I would start. And then I will go down the list to see if I support the people who made that or not. I see that is 8:24, and I'm sorry I kept you so long. Next month we will finish this, and I will show you websites where we can find the best MF, more examples of how you can grow your investment, different options, and we talk about retirement. We did not talk about retirement this time. I wanted to explain words to you all that you need to know before we talk about retirement. So next time we're gonna talk about retirement and explain how you can invest with your 401k and all the rules that come with that. You know, because of COVID, they changed the rules a little bit. So you all need to know that if you're retiring soon or if you have a 401k. So thank you to you all for your time. Thank you. If you have any questions, please email me. If you want the slides, please email me. If you have any experience with any of the options here, please email me so I can share with the group next time. It'll be easier to explain to everyone. Okay? I'm going to share my email in the chat. Treasury Love. Oh man. Lisa, thank you so much. You was awesome. Finish. Awesome, guys. Have a good night. Happy investing. Part 2.
Yeah, just a minute. Jackie, you and I will